Look, I need you to understand something that's happening right now in real time, while most people are completely asleep at the wheel. The dollar isn't just weakening, it's not just declining. We're watching the final stage of a currency collapse play out in slow motion, and the signs are everywhere if you know where to look. In the first half of this year, the US dollar fell over 10%. That might not sound catastrophic until you realize this was the worst 6-month performance in over 50 years. 50 years. We're talking about a decline that hasn't been seen since the early 70s, right before Nixon took us off the gold standard completely. And here's what nobody's talking about. This isn't a correction. This is a structural breakdown. The Federal Reserve is trapped. They've painted themselves into a corner with no way out. Interest rates are being slashed from over 5% down to projections of 2.5% by next year. Why? Because the economy can't handle the debt service at higher rates. We're talking about a government drowning in over $34 trillion of debt, and every percentage point increase in rates adds hundreds of billions to the annual interest payments. They have no choice but to print more money and devalue the currency. It's not a policy decision anymore. It's survival mode. But here's where it gets really interesting. While the dollar is collapsing, central banks around the world are buying gold at a pace we've never seen before. Not just buying it, hoarding it. The official numbers show over $1 trillion in physical gold banknotes held by foreigners. But that's just what they're reporting. The real number is likely much higher because central banks have learned to buy quietly, through intermediaries, through back channels, so they don't spike the price before they've accumulated enough. Think about what that means. The people who run the global financial system, the ones with access to information you and I will never see, are converting their dollar reserves into physical gold as fast as they can without causing panic. They're not buying gold ETFs. They're not buying mining stocks. They're buying physical bars and storing them in their own vaults. That tells you everything you need to know about where they think this is headed. Let me paint you a picture of what's actually happening behind the scenes. The BRICS nations, Brazil, Russia, India, China, South Africa, they've been working on an alternative to the dollar for years. But recently, something shifted. They're not just talking about it anymore. They're implementing it. Trade settlements in local currencies, gold-backed payment systems, direct currency swaps that completely bypass the dollar. Every month, another country announces they're reducing dollar reserves. Every quarter, another major trade deal gets denominated in yuan, or rubles, or rupees instead of dollars. This is the de-dollarization everyone warned about, and it's accelerating. When you're the world's reserve currency, your power comes from the fact that everyone needs your currency to do business. Oil gets priced in dollars. International trade gets settled in dollars. Central banks hold dollars as reserves. But what happens when that changes? What happens when countries realize they don't need dollars anymore? The demand collapses. And when demand for a currency collapses while the supply keeps increasing through money printing, you get exactly what we're seeing now. A currency in terminal decline. Here's a story that perfectly illustrates where we are. Back in the early 70s, France got suspicious. They looked at the amount of dollars in circulation, looked at the amount of gold supposedly backing those dollars, and did the math. It didn't add up, so French President Charles de Gaulle did something brilliant. He started sending warships to New York Harbor to pick up physical gold in exchange for dollars, not paper promises, physical metal, and other countries started doing the same thing. The run on Fort Knox had begun. Nixon had a choice. He could either admit the gold wasn't there, or he could change the rules. So on August 15th, 1971, he closed the gold window. Just like that, the dollar became a pure fiat currency, backed by nothing but faith in the US government. And for 50 years, that faith held. The dollar remained the world's reserve currency through sheer momentum and military power. But faith is a fragile thing, and right now, that faith is breaking. We're seeing the same pattern play out again, just in a different form. Countries aren't sending warships to pick up gold anymore. They're quietly buying it on the open market. They're repatriating gold stored in New York and London back to their own vaults. Germany did it. Turkey did it. Poland did it. They're preparing for a world where the dollar is no longer the anchor of the global financial system. And here's what makes this moment so dangerous. The last time we had a major currency crisis, back in 2008, central banks could coordinate a response. They could print money together, lower rates together, bail out the system together. But this time is different. This time, it's not a liquidity crisis. It's a confidence crisis. And you can't print confidence. You can't bail out trust. Once people lose faith in a currency, once they start dumping it en masse, there's no policy tool that can stop it. Look at what's happening in the bond market. Treasury yields are all over the place. Foreign buyers are stepping back. China has been reducing its treasury holdings for years. Japan, the second largest holder of U.S. debt, is facing its own crisis and needs to bring money home. Who's going to buy all this debt the government keeps issuing? The Federal Reserve, that's who. They'll print the money to buy their own bonds. And every time they do that, they devalue the currency a little more. It's a death spiral, and we're in the accelerating phase. Now, I want to take a quick moment here because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how a gold IRA works. I put together a free guide that covers exactly how to get physical gold into your retirement account without triggering tax penalties. It's in the description below. This isn't about speculation. It's about protecting what you've spent decades building. Worth checking out if that's relevant to your situation. All right, back to what's happening right now. The Conference Board's leading economic indicators are flashing warning signs. They're projecting slowing economic activity heading into next year and beyond. GDP weakening after temporary consumer spending. And here's the kicker. This is happening while the government is running massive deficits. Usually when the economy slows, tax revenues fall and deficits explode. But we're already running trillion-dollar deficits during the good times. What happens when the recession hits? What happens when unemployment spikes and government spending on social programs automatically increases? The math doesn't work. There's no scenario where this ends well for the dollar under current policies. The government needs to borrow more. The Fed needs to print more. The currency needs to devalue more. It's not a question of if. It's a question of how fast and how severe. Let me tell you about the mechanics of what's coming. When a currency collapses, it doesn't happen all at once. It happens in stages. First, you get the slow decline. The currency loses value gradually, and most people don't notice because prices rise slowly. That's where we've been for the last few years. Inflation running hot, but not catastrophic. The frog in the pot of water that's slowly heating up. Then you hit the second stage. The decline accelerates. Foreign holders start dumping the currency faster. Domestic holders start looking for alternatives. Gold and silver prices start rising not just in dollar terms, but in real terms. This is where we are right now, the acceleration phase. The dollar's worst performance in 50 years isn't a coincidence. It's a symptom of a deeper structural problem. The third stage is the crisis. This is when faith breaks completely. When people rush to get out of the currency all at once. When prices start rising not by the month, but by the week, then by the day. When the government loses control of the narrative and has to implement capital controls, price controls, all the desperate measures that failing governments always try. And they never work. They just accelerate the collapse. History is full of examples. Weimar Germany in the 20s, Zimbabwe in the 2000s, Venezuela in the 2010s. Argentina has been through this cycle multiple times. The pattern is always the same. Excessive government spending, massive money printing, currency collapse, and the people who see it coming and position themselves accordingly, they're the ones who preserve their wealth. The ones who don't, they get wiped out. But here's what makes the dollar collapse different from all those other examples. The dollar isn't just another currency. It's the world's reserve currency. It's the foundation of the entire global financial system. When the dollar goes, it takes everything with it. The bond market, the stock market, the real estate market. Everything priced in dollars becomes suspect. Everything denominated in dollars becomes a liability. Think about the implications. Your savings account? Losing value every day. Your retirement account? Unless it's in hard assets, it's evaporating in real terms. Your paycheck? Buys less and less with each passing month. This isn't some distant theoretical problem. This is happening right now. The purchasing power of the dollar has been cut in half over the last few decades, and the pace is accelerating. And here's the really scary part. The government knows this is happening. The Federal Reserve knows this is happening. But they can't stop it without crashing the economy. If they raise rates high enough to defend the dollar, the debt service becomes unpayable. The government defaults. The economy collapses. If they keep rates low and keep printing, the currency collapses. The economy collapses. They're trapped between two catastrophic outcomes, and they're choosing the slow collapse over the fast one. They're hoping they can manage the decline, keep it orderly, prevent panic. But markets don't work that way. Confidence doesn't erode in a straight line. It holds and holds and holds, and then it breaks all at once. And when it breaks, when the panic starts, there's no stopping it. The Fed can't print confidence. The government can't legislate trust. Once the herd starts running, you either run with them or you get trampled. So what does this mean for you? What does this mean for your wealth, your savings, your retirement. It means you need to think differently about money. You need to understand that dollars are not wealth. They're a claim on wealth, and that claim is being diluted every single day. Real wealth is assets that hold value regardless of what happens to the currency. Real estate, productive businesses, commodities, and most importantly, precious metals. Gold and silver have been money for 5,000 years. Every fiat currency in history has eventually failed. Every single one. The dollar is no different. It's just taken longer because of America's economic and military dominance. But that dominance is fading. The world is multipolar now. The dollar's monopoly is breaking. And when it breaks completely, gold and silver will be the only forms of money that everyone still trusts. Look at what's happening in the physical markets. Premiums on gold and silver coins are elevated. Delivery times are extending. Dealers are struggling to keep inventory. This is happening while the paper price is being suppressed through futures markets and derivatives. There's a massive disconnect between the paper market and the physical market, and eventually that disconnect resolves. When it does, when the paper market breaks and price discovery moves to the physical market, we're going to see a repricing that shocks everyone. Think about the supply and demand fundamentals. Gold production is essentially flat. It costs more to pull gold out of the ground every year as the easy deposits get depleted. Meanwhile, demand is exploding. Central banks buying, wealthy individuals buying, institutions buying, and the available supply of physical metal is limited. You can't print gold. You can't create it out of thin air. It has to be mined, refined, fabricated. That takes time and resources. Silver is even more interesting because it's both a monetary metal and an industrial metal. It gets used in solar panels, electronics, medical applications, thousands of industrial uses. And unlike gold, most of the silver that gets used is gone forever. It's not economically viable to recycle it from most applications, so the above-ground supply is actually shrinking while demand is increasing. The setup for a supply squeeze is perfect. And here's what nobody's talking about. The COMEX, the exchange where gold and silver futures trade, operates on a fractional reserve system. For every ounce of physical metal in the warehouse, there are dozens of paper claims on that metal. It's the same scam the banks pulled before 1971. Just in a different form. And just like back then, if everyone who owns paper gold or silver demanded physical delivery at the same time, the system would collapse. There's not enough metal to cover all the claims. We've already seen glimpses of this. During the panic in 2020, silver premiums spiked to over 100% above spot price. You couldn't find physical silver anywhere. The paper price said one thing, but if you actually wanted to buy real metal, you paid double. That disconnect is going to happen again, but bigger. Much bigger. And when it does, the paper price becomes irrelevant. The only price that matters is what someone will actually sell you physical metal for. This is why central banks are buying physical gold and storing it in their own vaults. They understand the game. They know the paper market is a fraud. They know that when the crisis comes, the only thing that will matter is what you physically possess. Not what you have a claim on. Not what's in a vault somewhere with your name on it. What you actually hold in your hands. The stress tests the Federal Reserve is running tell you everything you need to know about what they're preparing for. They're modeling severe economic slowdowns, rising unemployment, market shocks. They're not doing this for fun. They're doing it because they know what's coming. They're trying to figure out which banks will survive and which ones will fail when the crisis hits. And make no mistake, they're planning for a crisis. The only question is timing. Some people think this can go on forever. They think the Fed can just keep printing money indefinitely, that the dollar will remain the reserve currency through sheer inertia. But that's not how systems work. They appear stable right up until the moment they're not. The Soviet Union looked permanent until it collapsed in a matter of months. The housing market looked solid until it crashed in 2008. The dollar looks stable until it doesn't. And we're seeing the warning signs everywhere. The velocity of money is changing. The dollar's share of global reserves is declining. Trade patterns are shifting. The infrastructure that supported dollar dominance for 70 years is being dismantled piece by piece. Each individual change seems small, but they're cumulative. They're building toward a tipping point. Here's what that tipping point looks like. One day, a major country announces they're no longer accepting dollars for oil, or a large bank fails and the Fed can't bail it out without printing so much money that inflation explodes, or a geopolitical crisis forces countries to choose sides and half the world decides they're done with the dollar. It could be any of a dozen different triggers, but once it happens, once the confidence breaks, The cascade is unstoppable. You'll see it in the currency markets first. The dollar will gap down. Not a gradual decline, but a sudden drop. Then the bond market will seize up as foreign buyers disappear. Then the stock market will crash as investors realize their dollar-denominated assets are worth less in real terms. Then the real economy will feel it as import prices spike and supply chains break down. And through it all, gold and silver will be rising, not because they're going up, but because the dollar is going down. This is the final stage, the end game, the moment when decades of monetary mismanagement come due all at once. And the people who prepared, who understood what was coming and positioned themselves accordingly, they'll be fine. They'll preserve their wealth. They might even profit. But the people who trusted the system, who believed the government and the Fed would protect them, they're going to learn a very expensive lesson about the difference between currency and money. The question you need to ask yourself is simple. Do you believe the dollar will maintain its value over the next 5 years? 10 years? 20 years? Do you believe the government will suddenly become fiscally responsible? Do you believe the Fed will stop printing money? Do you believe the global trend toward de-dollarization will reverse? If the answer to any of those questions is no, then you know what you need to do. This isn't about timing the market. This isn't about trying to predict the exact day the crisis hits. This is about recognizing the trend and positioning yourself on the right side of it. The dollar is dying. That's not a prediction. That's an observation based on the data we're seeing right now. The worst 6-month performance in 50 years. Central banks dumping dollars and buying gold. Leading economic indicators pointing toward recession. The Fed trapped between impossible choices. The final stage of a currency collapse is when everyone realizes it's happening at the same time. When the denial breaks and the panic sets in. We're not quite there yet, but we're close. Closer than most people realize. And when it happens, when the rush for the exits begins, there won't be time to prepare. The premiums on physical metals will explode. The dealers will run out of inventory. The banks will implement capital controls. The government will do everything in its power to prevent you from protecting yourself. That's why you need to act now while you still can. While physical gold and silver are still available at reasonable premiums. While you can still move money out of dollar-denominated assets without restrictions. While you still have options. Because once the crisis is obvious to everyone, those options disappear. The time to prepare for a storm is before it hits, not during. The dollar is dead. It just doesn't know it yet. But the smart money knows. The central banks know. The billionaires know. They're all moving their wealth into hard assets, into things that will hold value when the currency collapses. The only question is whether you're going to join them, or whether you're going to go down with the ship. This is your warning. This is your wake-up call. The final stage has begun. What you do next will determine whether you preserve your wealth or lose everything. Choose wisely.